Hey everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. In this video, we'll be featuring the stocks that you see on your screen now. And as a quick reminder, if there's a particular stock that you're interested in, you can go right to it using the chapters feature on the video. All right, with that said, let's take a look at the market. Pretty interesting week. So when we look at the S&P, we finished nicely to the upside today. We had the PCE deflator that was released this week, which is the Fed's favorite inflation gauge, because of course they can't go by the CPI or PPI. They got to have their own favorite that they look at. And basically that came out and it was fairly tame. There was a 2% rise in personal income and spending. That's something that's viewed for people to get a gauge on the consumer, whether or not they're still spending. And the viewpoint was where we talk about Goldilocks, where we talk about how a number is kind of right where you want it to be. In this instance, the number was nobody was happy with it. So that kind of, when you make a deal, when you're doing a negotiation with somebody, the comment is always, it's a great negotiation, it's a great outcome if neither party is happy. Well, I think that's kind of how things worked out with the PCE deflator. And so you can see that certainly didn't move the markets too significantly. And here we are up to a really important level at 460. Now, some of the other markets are in better shape than this, so we'll talk about that when we get there. But for the SPY, which is my view of the better view of the market than the DIA, to really be comfortable enough to go long, we've got to break above 460 with follow through. But we're right there, and we put the 10-day moving average on. The positive is we have recovered that overbought scenario. However, we still have the fact that that was a fairly vertical move, and we also still have the fact that there are gaps here that haven't been filled yet. So it's not all clear yet, but certainly the market is more constructively bullish than it has been over the past couple of weeks. But no five-wave Elliott Wave impulse pattern labeled still. And so this is just one big impulse pattern, and we have to wait and see what that moves out to. Now, those of you that have been watching for a while, have gone through our educational process that we have at ewotrader.com, know that all five-wave impulse patterns start with a zigzag. So is this just an A-wave impulse of a new zigzag to start a new five-wave pattern? We're going to have to wait till next week to see. Thought maybe we might figure that out this week. Last thing to note here on the chart of the SPY is the fact that we have a little bit of an expanding triangle. It's small, but if you've heard me say numerous times, Elliott always said, don't diss the small triangles. Pay attention to those as well. So a breakout from here, if it were to break to the upside, would give us that sign to go more constructively bullish if we could break above 460 with the follow through. Or there is still it's getting smaller, but there's still a possibility that the market rolls over from here and heads to the downside. We'll have to wait and see how that plays out. But now as we move over and look at the TNX, the 10-year, you can see that we moved to the upside yesterday in rates. And when we were doing our trade finder on Tuesday night, we were talking about how, the song remains the same. And what we've been talking about recently is the fact that when rates were up, the market was down. If rates were down, the market was up, kind of referencing the old Led Zeppelin song. And then it looked like for a day or two, maybe we were breaking that consolidation, if you will, or movement together. And then back to where we are. We had that move to the upside yesterday in rates, and then back down in rates today, which is why we had a bit more of a bid in the market today, right at the 45%. So we're nearing a 50% correction in rates, but no bounce really of any significance off that 38.2% level. So while we were going through and talking about that in Trade Finder, we also had some comments on Thursday night, which would have been last night, in our insiders meeting, which is for our alert subscribers only at ewotrader.com. They have their own a webinar with an extended Q&A. We actually had a really nice Q&A over on the Hub Financial channel today. So if you haven't gone over there, go register at the Hub Financial channel here on YouTube and join us every Friday at 2 p.m. Eastern time, where we do a real brief rundown on what's going on in the market and take your questions and look at the stocks that you have interest of in. But anyway, back to here, we talked about how last night the market had been moving lower. Looked like maybe that was going to be the rollover. And then Janet Yellen comes out at 3:30 Eastern time and makes some very dovish comments. She said that she felt like the Fed was done. No more rate hikes are necessary, even though Powell came out today and said, hey, we're not ruling out more rate hikes. But Janet Yellen, who Treasury Secretary used to be with the Fed, was saying that she felt like things were done, that we're in a good place, and that at this point in time, maybe we were going to start to see a pause, a distinct pause, and that this was good for the market, especially with personal wage inflation coming down, and that could give us an opportunity for the markets to go higher. So she couldn't have been more dovish, and that shot the market to the upside on an intraday chart yesterday at 3:30. And then we get the follow through with rates to the downside today. We were just wondering, are we going to start this wave 5 to the upside in rates, which would certainly be problematic for the market, but only a one-day bounce, and then back down we went. Looking at the 10-day moving average, we're just kind of trending lower with the 10-day moving average. Then we take a look at the dollar, and the dollar had bounced to the upside yesterday. Don't have a chart from today yet. We don't get that futures quote until a little bit later on in the day. But the dollar was back down today as well. So back down on interest rates, back down on the dollar. That's the Goldilocks scenario if you're looking for one for the markets. And that's why we saw a nice finish to the upside in the markets today. Looking at the VIX, so if you're long the market, this is where your concern is. The fact that we have broken below that 13 level. Now, some of you may argue, well, that's a good thing because the VIX has been down to 10 and even 9 over the past couple of years. So just because we've held 13 recently, and every time we hit 13, we had a little bit of a bounce, doesn't necessarily mean that's going to happen this time. But I still think that with the vertical nature of the move in the S&P, we're right at resistance. We have a very low VIX, breaking below 13. There's still caution. It's still not all in yet to the bullish side. But I will say things are looking a bit more constructive. And what I mean by that is if we take a look at the DIA, really impressive move here. And we actually had some commentary both Tuesday night in Trade Finder as well as last night, wondering if this is a flight to safety. We talked about the vertical nature of the SPY. Look at that. But you can't get much more vertical than that. And the Dow, as evidenced here by the DIA, has broken above its July highs. So we're bumping our head against it on the SPY, but we've broken above it on the DIA, and significantly so. That's what you want to see. If you're bullish on any sort of a security, when you break above a resistance area, and you hear me talking about you need a breakout with follow through, I always add that in. That's what it looks like. So we broke above this resistance level at 355, and there's your follow-through day. Now, the only negative here is we're a little overbought on the Dow now, again, as evidenced by the DIA. So perhaps we get a little pause in the Dow at the beginning of the week, even a move back down towards this 355 level. It was resistance. Is it now going to be support? It doesn't have to do that. But one thing that does have to happen is the market and the 10-day moving average come back together. So it can either go sideways and allow the 10-day moving average to catch up, or it can back up and meet the 10-day moving average somewhere along the lines. But as long as we stay above 355, I think you have to be long the Dow. So I can't make that same call here with the SPY because, as you can see, we are at resistance here. But a whole different story on the Dow. And now let's take a look at the Qs. Who were benefiting today from the fact that rates moved back down. But you can see we're just kind of struggling here. We got above those July highs. The Qs were the first market to do it. And you're wondering, are they the leader? And then they've just gone dead sideways and literally back down a little bit. We were able to close above the 10-day moving average both yesterday and today, so that's a positive. But we're just really consolidating right on top of those July highs. So what we want to see out of the Qs, obviously we're going to need rates to stay calm and not take off in that wave 5. We need rates to stay where they are, and then a break above 390 with follow through. Note, there was the break right there on the 20th of November, but we didn't get the follow through day. Notice how that chart is different from what I just showed you on the Dow. So this doesn't have follow through. We have traded above 390 a couple of days, but no close above it with a follow through day the next day. So that's the difference in what I'm talking about. Now, a market that, again, if you're bullish, you'd be really excited about this today is the IWM. And we were having this conversation both Tuesday night during Trade Finder as well as last night during our EWO Alert subscribers insiders meeting, that if we could break above 180, and we were talking about that because we had this little triangle, same thing as I was mentioning. Elliott says, don't diss the small triangle. So we had an ascending triangle. There's the breakout today. Can we get the follow through day? That's going to be what we're looking for on Monday. It's kind of a mixed bag here on the IWM. It was a nice break to the upside today. If we look at volume, kind of on the lower end of volume, would have liked to have seen a little more volume sneak in there. But the other thing is that we are still in a qualified 5-wave to the downside pattern on the IWM, and we are right at the 61.8% fib level, the strongest of all fib levels in my opinion. So we can't get too excited yet. Definitely a constructive day to the upside on the IWM. And if you're one of the believers, as a lot of people are, that the small caps are kind of a good indicator of risk on, risk off. You see the small caps performing well, certainly an indication on a lot of people that that is a green light to go long. Caution again, we have to have that follow through day. Now we could follow through and break that wave 4 high there and literally disqualify this pattern. But the 61.8% fib level often acts as pretty strong resistance. I would be really impressed if the IWM closes higher on Monday. But if it does, then there's your breakout and follow through. And if we break above that level, then we probably are going to run up to 190 in a very short period of time. And then we'll take a look and see where things go from there. So it's a mixed bag on the IWM. Positive day, breaking above 180. But yet bumping our heads against this strong resistance fib level. So pretty interesting stuff there on the IWM. All right, so if we take a look at some stocks of interest, Bitcoin, as we always look at each and every week, powering higher at the time of this recording. And again, I know it trades 24/7, but this is an end-of-day software program that's from the Hub organization at hubb.com. A lot of people have been asking, hey, we're going to find out like that software. We're going to find out more about it. You can send an email to support@hub.com. And we have a live version that's coming out that we're all super excited about. The beta version has been released, so it'll be available for the public here very soon. And so at the time of this recording, my long-winded point is that we are much higher on Bitcoin, moving above 38,000. I still am a little concerned about this vertical move here, but this is far more constructive. This is the kind of move I like, the 45-degree angle, and we could just continue to power up to that 42,000 level as we start looking towards that halving that's supposed to happen in the first quarter, towards the end of the first quarter of next year. So really impressive move there on Bitcoin. And then I have a couple of, obviously, Coinbase. We always want to talk about that. That was asked about in the live show over on the Hub Financial channel today. And we had this move back down to the 10-day moving average yesterday. That's all it took to correct that vertical overbought scenario. We'd gotten away from the 10-day moving average. So I just wanted to show you this. So I'm going to walk the chart back, which is a cool feature that you can do here on this software. So you just click there on the feet and we go back and you can see, look at the separation there between where we were just 2 days ago and the 10-day moving average. And then boom, yesterday, right back down to it. And it allowed it to catch up. And off we went again today on Coinbase, which is expected as Bitcoin moves up as I've referenced before. Pat myself on the back on this one. I don't get everything right, but I certainly got this one right, where we said that if you stayed above 70, you had to stay long Coinbase. If we could get above 80, we'd have something going. And also made the comment that, hey, if Bitcoin continues higher, it probably drags Coinbase with it. All that stuff happened. Now, on the other side, to be fair, I did mention that I felt like once we had this vertical move, perhaps we would come back down and test 110, which was the July highs. Well, we didn't quite make it that far. So the low of the day here was 118. So we didn't quite get down to 110. So trying to be fair on both sides. If you're going to pat yourself on the back, you have to be real on the other side as well. But I do think Coinbase is on a target to 150. That's where the Elliott Wave software program has the targeted price there. I don't know that it runs continuously vertically like this. We could do some backing and filling here, but it does look like 150 is in the cards for Coinbase. And I wanted to show you MicroStrategy that had been in a consolidation pattern here for a couple weeks. Had a big move to the upside today, moving up nearly 6%. Over 28 points. And some of you may already be aware, MicroStrategy has a huge investment in Bitcoin. So not only they have their traditional business model, but they move a lot with Bitcoin because they're so heavily invested in it. So that's why you saw that big breakout move there. And note, we closed above that close back on the 24th of November. And we have broken above this area of resistance here around 510 or so. So new closing high there on MicroStrategy. And if Bitcoin does stay strong, if it continues to move higher, I think you see MicroStrategy move higher. So let's see if that follows through at all. On Monday, looking at the 10-day moving average, you can see we actually tapped the 10-day moving average on the low. So my point is this is not overbought from the 10-day moving average. So if we can continue higher from here, you might be wanting to look at MicroStrategy to the long side. Looking at AI. This was asked about in the live show over on Hub Financial today as well. UIPATH. Look at that move, and that was on earnings. So if we put the earnings cycle on here, you can see that boom. And you can go read about their earnings report, but it all has to do with AI. So AI is still strong. We're not going to look at NVIDIA today. We looked at it last week. We'll look at it again next week. It's been consolidating, but that doesn't mean the AI story is dead. So here you can see that they are finding opportunities. And isn't it interesting that we had this big ascending triangle right here on symbol PATH, UiPath, and there was the set a higher low. So there's your ascending triangle. And the earnings report based on the AI blast higher. Now, this one, I have a little different view than with MicroStrategy. That I can't chase that move. My disciplines will not allow me to. You can see the 10-day moving average is way down here, still at the resistance level at 20, and we closed at 24.54. So nearly a 25% move to the upside in this stock. Perhaps you watch for some backing and filling, maybe some sideways consolidation, but that stock price and the 10-day moving average have to come closer together before I could consider going long here. But I do think at some point in time, again, the Elliott Wave algorithm likes this price around 28. You probably see that in the not too distant future, but I just can't chase it right now. But that was an impressive move. And so I thought I'd share that with everybody today. Looking at gold also nice move to the upside today. Now we're right here at this resistance level at 190, breaking just above it. And look at this zigzag pattern here. It's a great zigzag pattern. You hear me talking about this all the time. My favorite pattern, my favorite directional pattern by far is a zigzag. And when you have call it a 38.2% B-wave correction, you're looking for a 61.8% extension. So we did have a long alert for our alert subscribers at evotrader.com on GLD, and I did send the alert to take it off and take the gains because of this, because we're at the 61.8% level. We're at an area of resistance from May. Could we continue higher from here? Of course we could. But being at resistance and hitting that fib level, we can keep an eye on it. And if it continues to power higher, we'll re-enter it. If we look at the DMI, The DMI is constructive. My favorite confirming indicator to Elliott Wave and these zigzag patterns. And the positive directional indicator basically measures strength of the buyers or bulls. Negative directional indicator measuring the strength of sellers or bears. And the ADX telling you the strength of the move. It's not directional in nature. In other words, if you have a strong downside move, the ADX will still go up. But the fact that you see that, it is telling you that, hey, there is a strong likelihood that GLD is not done. That GLD will continue to power higher above the 61.8% level and move up to that 100% extension at 197. And if it goes to 197, is it really not going to go to 200? So we're going to keep a close eye on this. We may re-enter this next week for another long position, but it was a reason to take profits today. Again, we'll keep an eye on it. And if it does start to break, as the DMI suggests, then we'll jump back in because there's plenty of movement there to take advantage of it. All right, so getting a look at the oil, staying kind of in the commodity space. Oil is interesting. We have almost a weird triangle forming here. It would be a really well-formed triangle if it wasn't for yesterday's volatility. But other than that one outlier bar there, that's a pretty good-looking triangle. So finally, we're going to get some sort of a move. Oil's been doing nothing for the past couple of weeks, but it does look like it's getting ready to make some sort of a break. We're kind of at that 61.8% fib level here. So if we start to break to the upside, you could see a nice move higher in oil. I think that would be a positive as far as the consumer and the economy. However, if we break to the downside, it's a pretty easy target. If oil were to break to the downside, we're probably coming down here to the support somewhere in the 60 area. So look for oil next week to give you an idea. There's going to be follow through in the price of oil. An upside break, and I think we could be off and running higher. A downside break, and we're probably coming down to 60. So there could be a pretty good trade next week on oil, either to the upside or the downside. Staying with the space on the retail side with Amazon, we said that, hey, we start to get the weekend numbers with Black Friday, Small Business Saturday, and Cyber Monday. We're going to start to see what happens. And here's another good example. Even though we've had that holiday week where I'm sure there was a lot of spending. Now, whether or not it shows that the numbers are good or disappointing as far as what the retail trader or retail consumer spent over the holiday weekend, we're right at that 61.8% fib level, which is acting as resistance. Another example of why I talk about that. So we're at the wave 3 high. We're at the 61.8% level on Amazon. And I think we're going to need Amazon to come out and say, hey, it was a great holiday weekend. And if it does, then perhaps we can bounce up and move up towards that wave 5 high around 160. But we got to break out of this first. So a break up to a close around 150 with follow through, then I think you see 160 on Amazon. But for right now, I think you wait and see. Keep an eye on Amazon. We're right at the 10-day moving average. A little bit, not a great looking one, but a little bit of an ascending triangle here. So does that break like gold, etc.? We'll have to wait and see. But same, very similar triangle there. And then Costco, kind of not quite the same as Amazon, has had a couple nice days. Costco had a downward move right here, and that was on the back of Walmart's earnings. Walmart came out and had good earnings, but they were very cautious on their guidance, and that kicked Costco down a bit, but it needed to be because it had that vertical move. Again, I don't like vertical moves because what goes straight up often comes straight back down. No better example than one right there on Costco. But it has recovered, moved back. We tested the 600 level high there on the 27th, and it looks like we're going up and going to try it again. So if we can break above 600 on Costco, we could go much higher. The negative note is that wave 5 is already extended 167%. So we're getting pretty extended here. Call it 161.8% wave 5 extension. So Costco really has to show something here, and I think it needs the DMI to show strength to do it, and it's not there right now. So I'm not seeing the kind of strength out of the DMI on Costco that seen on other stocks that we featured to break above that 600 level. That ADX needs to turn up if we're going to break above 600. So We keep testing that level. One of my mentors, and it's one of the reasons that we do this, is to help people. Someone that helped me always talked about the third time is the charm. In other words, so we hit 600 once, got kicked down on Walmart's news. We tried it again, got kicked down again. Now it looks like we're running up to try the 600 level again. So the comment on that third time's the charm means if we can break above 600, then we're probably off and running to the upside. If we can't break it and move down, then we're probably going to see more of a corrective move out of Costco. And then finishing up in the international markets, as we like to do for our friends in India, just a really nice break above that 45 level with follow through. So there's your break above it. We had been talking about this for the last couple of weeks. The INDA had just run up to this 45 level, and it was acting as resistance. It was the previous wave 3 high. And look at this. We have the ADX moving higher. It is above 20, but it's got to get above that negative directional indicator first. But there's great separation between the positive and negative. We could see a signal here on Monday or Tuesday out of this ADX that shows that, yes, indeed, the INDA is on its way up to this at least wave 5 target at 47.5. We're a tiny bit overbought right now, so maybe a little pause at the beginning of the week. But as long as we stay above 45 and you're looking for a place to go long, you could do a lot worse than the INDA. So thanks as always for your attention in watching us. And please hit that like button. And if you like these, hit subscribe. And you'll be notified immediately when one of these videos is posted. And leave a comment underneath the video. As I mentioned to you last week, starting in January, we're going to be giving away a subscription to our level 3, which is all 3 of our alert services at ewotrader.com each and every month for anyone that leaves a comment. So get involved in that. If you leave a comment between now and the end of the year, you will be eligible for the drawing in January. So have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.